welcome to part one of the market structure course. Now, by the end of this course, you're going to be able to identify market structure in a very meticulous way, but we are going to start from the ground up, and I'm going to give you a great foundation in this video to understand how to identify the overall trend and direction of the market. And then we will get into the more detailed and intricate sides of it, adding elements of liquidity, supply zones, and where to actually look for your trades. But the first step in understanding market structure is the overall direction, because you cannot plan trades and you cannot have a bias if you do not know the overall direction of the market. Now, if you're looking to buy in this scenario when the market is clearly bearish, it's going to be very difficult. There's limited opportunities for you to get into buys. You may have been able to get, a buy down in here off some sort of a support level or a demand level, but you never actually got this impulsive move higher that you were looking for, and you could have sold anywhere in here, here, or here with a proper stop loss and made money as the market delivered lower. So there are a lot more opportunities for you to not necessarily be right about where price is going to drop from, but you know the overall direction. So whether you got in here, here, any of these highs, or this last final high right here, you could have had an opportunity to make money as it pushed below this low down here if you had placed your stop loss in a reasonable area where it wasn't too tight and had some room to breathe. Now, vice versa, if you were buying, you would have had to have timed your trade at an extremely accurate level and took your profits very early, not getting that extension through these highs. Now, let's go ahead and just look at what market structure looks like at a very basic level. Now, if you are in a bullish trend, you are expecting to see higher highs and higher lows being put into the market. It's going to look something like this, right? It doesn't have to come all the way back down into this bottom here. It just has to form a higher high and a higher low and continue to form that pattern. Now, if you're looking for a bearish example, that's the same thing. We're looking for a lower high to be put in and to start putting in lower lows. It's going to look something like this, right? We have a breakdown in structure. We start to form lower lows, lower highs, and that is very, very simple structure at the core of what you're looking at. Now, this is going to become very, very messy on lower time frames. Now, this is where you can start to get into the first lesson of market structure, which is to pick two time frames. Do not try to trade the 5-minute, the hourly, the 4-hour, the daily, the weekly, and the monthly. You're going to get analysis paralysis. You're going to get so many different conflicting ideas on these different time frames that it's going to be difficult for you to actually form a bias that you can stick to and trust your gut. Because if you have that much information, your 5-minute might be very bullish. Switch to the hourly, it could be bearish. Back to the 4-hour, it could be bullish. Daily could be bearish. So you're very, very confused when you have that much data. First lesson is pick two time frames. And I like to try to pick time frames that are about 10 times smaller or bigger, right? So if you're going to go with a 5-minute time frame as your smaller time frame, I would go with something like an hourly, which is slightly over 10 times bigger, as your main time frame. Now, if you're doing a 4-hour time frame, then I would look for something that comes out roughly around like 20 to 24 minutes, which is kind of a weird time frame. So I would go with a 15 or a 30-minute time frame for your smaller on the 4-hour. Same thing with a daily, you may use an hourly chart, or you may use something like a 2 or 4-hour chart, just to get the overall smaller time frames without getting too much confusion. Because inside of each of these moves down, an impulse is higher. On the lower time frames, you're going to start to see things like this. It may start to come down, lower lows, lower highs. We may shift higher, back down, and then finally start to form those higher highs and higher lows. So if you're looking at a different time frame, this can get very confusing, because while this is essentially what's happening, this is what it looks like on the lower time frames. A lot more confusing, a lot more volatile, more breaks of structure that are false breaks that then take you out later. So we'll get into that down the road in the course. But right now, we're just going to talk about identifying the major points in the market. Now, the same thing for the bearish example. You're going to get this choppy price action on lower time frames. So for this, we're going to use the hourly and the 5-minute, just for example's sake, just so you can start to understand market structure in a broader view. Now, if we go to our hourly chart, we'll even start on the 5-minute chart, just to show you that this stuff applies on every time frame. Now, what you're going to want to do to start to form your bias, no matter what time frame you're using, use your higher time frame. So for example, if you're a scalper, maybe you're using the 5-minute time frame and then you're using like a 30-second chart or a 1-minute chart to get your entries. So if we look at this right now, why would we have wanted to sell here? Well, where did this impulse come from? This entire move down came from this up move here. So here is your first piece of structure. Guess what happens? We trade back into this structure and we form a new low. So where did this low come from? Well, it came from this entire move up. And then it gets broken. So now you may be looking for bullish opportunities on a 1-minute or a 30-second chart. So if I were to come back into here after seeing this break of structure, let's say I want to use a 30-second as my scalping time frame, my 2 different time frames, we now look for entries in here. And you can see that when price comes back down into this overall range of this market structure shift, we start to see more changes of character. We start to see these breaks of structure on our lower time frame, and it offers entries for you to take price higher to the top of this box up here. Now, if we go back to our 5-minute, which at this point is our base time frame if we are scalping, we look to our left. Why did we sell here? Where did this move come from? Well, it came from this impulse down. And where did that come from? This entire move up. So now we're starting to see market structure as entire moves rather than just candlesticks. Okay, so you're seeing this entire move up, a big sell-off. We return to this zone, we have a move up, and then a big sell-off. Then we've broken structure. We start to move up again into here, and then we sell off again. Now that we've broken this structure, you may expect to see the same thing happen. You may expect to see it trade into here and then put in a new high. Now we'll go to an hourly chart, so it's a bit easier to see, and maybe you're not a scalper, and that's okay. We'll just start to follow price on the hourly chart. Now, if we do the same thing, you can see what is going on. We'll just start right here. It's a good example. We have a move down. This entire move down comes from here. And then we have this break above, and we have an impulse with a full body break outside of this, showing that the momentum is pushing higher. There's displacement in the market. That shows me that I want to be looking for some sort of a buy in here. Now, if we follow that out even more, we'll take this down, and our lowest point is here. Where do we come to? We break structure right there, and then the market fails. So now that we have had our opportunities in here to make money as price pushed higher, we have now failed. Well, where did this break structure at? It broke right here. Go ahead and mark this out. There's our break of structure. And where did that move come from? Well, this impulse higher before we sold. So now you have this buying pressure coming into the market and then pushing price below and breaking this low down here. That is your sign that you have now shifted into possibly a bearish market. And if we look at this, you can see that that's exactly what happens. We trade back into this impulse that broke structure, and we have multiple opportunities. So it doesn't matter if you were selling here or here, here, any of these highs in here, or even this last final high in there. There are multiple opportunities for you to be selling if you understand that this is the high that we want to protect. So it doesn't matter if you put your trade on here, here, or even over here. So there are multiple opportunities if you know that this high is going to be your new protected high, and this is the market structure that we're currently in. This gives you way more opportunities to be right about the market than it does for you to be wrong. If you don't understand how to start marking out market structure from a overall standpoint and viewpoint of what's going on in the market, then you're going to try to be buying at all these different zones down in here, and it's going to be very difficult for you to make money because you're going to have to time it perfectly, and you're not going to be able to target a big extension. It's going to have to be something like this where you time it just right and you're very quick to take your profits. You cannot target this high or anything beyond this high because we are in a bearish range. Now let's just go ahead and continue to follow this. We had this break of structure. Go ahead and delete these drawings so it's a bit easier for you to see. We have this new break of structure down to the downside. All right, we broke down through here. And where did this come from? Well, it came from this up move before the down move. So this is our new piece of structure that we expect to hold price down. And we can already see that we started to trade back into it. We pushed up into this, filled some of this imbalance, and then began to sell down. Now, we did not get the full move below this low. That never happened. We have not quite delivered to this low. So it's quite possible that this is an okay place to sell from. Any of these may have been an okay place to sell from, and you could be targeting this low until you see this high get broken. So when you start to understand where market structure is actually coming from, the real moves in the market, it makes it a bit easier for you to trade and make sure that you're in the right side of the market. Because look at how much choppy price action is inside of this. Instead of seeing this as lower high, lower low, lower high, lower low, possibly a new lower, high and a new lower low, you get all of this choppy price action inside of here, which is what I was talking about in the beginning of the video. This is why we only stick to 2 time frames, because there's so much price action going on that it can get very confusing. So you could even go inside of here and start to look for some of the same things if you want to get crazy with it. You can start to see that this entire down move right here, and more specifically, this down move formed this new high. So when price trades back into this last selling right here, before this high is put in right there, you could have been looking for buys inside of here, and then the market fails, comes down here. So we've broken structure. Where did that come from? From this high, this buying pressure before the sell-off that broke structure. So you could have taken trades in here, which ultimately fail. So that's why it's best to just stick to your higher time frame and understand where the overall order flow is in price. So this is just to get your brain start turning and see structure as a overall direction rather than just what's going on inside of here. And hopefully that is just going to clear things up. And in the future course sections of this little mini course on market structure, we will talk about how to spot liquidity, points of interest, and then get into our lower time frames in a bit more depth. So thank you guys, and I will see you again next week.